Welcome back to the Great Rotation. Today we're performing a structural diagnosis of the August 2026 divergence, a critical signal every investor needs to understand. As we move through our 2026 roadmap, we've encountered a strange calm in the indices. Today we'll reveal why high prices can be a trap and look at a specific case study in SpaceX. In early August 2026, the market presented an illusion of strength. Our price ratio indicator hit a very strong 0.94, making the market appear healthy and ready to challenge old peaks. However, beneath this surface, the engine was failing. On August 3rd, our acceleration gap indicator, the market's internal force, plunged to a deeply negative reading. The A gap hit negative 4.81. Think of it like a hot air balloon. The altitude is the price, but the burner, the internal force, has just been extinguished. This bearish divergence is a reliable warning signal. It confirms the rally was a bull trap, driven by low-quality momentum and not supported by genuine buying force. In contrast, consider SpaceX. While the broader market shows weakness, SPCWX presents a structure coiled for a violent move upward, a two-act play. SPCX has confirmed a rare triple bottom in force at absolute zero, followed by a violent A-gap ignition. This is a high-conviction bullish reversal signal. The structure completed an exhaustive capitulation bottom. As of today, August 3rd, SPCX is in a state of maximum potential energy just before the earnings catalyst. Act 1 is the post-earnings ignition. With extremely negative sentiment and short interest over 30%, any news that isn't a total disaster will trigger a violent squeeze. We expect the A-gap to reignite on August 4th and 5th, confirming a new wave of accumulation and driving a high-velocity price rally. But the true test comes in Act 2, the resistance. On August 6th, the lockup expiration will release a massive new supply of shares. The initial rally will hit the key $135 IPO price. The decisive battle happens here. Will new accumulation be strong enough to absorb the new supply? Sellers will take control if we see a negative divergence at 135. If the A-gap weakens and turns negative during this second act, the rally will fail. Structure always shifts before the public reacts. The A-gap's behavior this week will provide the final verdict and determine the stock's next major trend. Listen to the engine, not the altitude. In the summer of 2026, internal physics provided the warning invisible to the ticker. I'm Professor Clock, and I'll see you next time. Next up, we master the market clock dial, the visual language of liquidity phases. Make sure to stay tuned for that deep dive. Please review this mandatory disclaimer. All performance is for educational purposes, and investing involves risk. Professor Clock and affiliates are not responsible for each other's services.